Welcome back. On expiry day, when you're down close to around 85 points and have come off close to around 110 points off the high point of the day. We're just 20 minutes into the trading session, but it's not looking very, very good. The 17,450, that's the line in the sand that needs to hold out. As we saw yesterday, once we broke that 17,720 odd mark, we saw a quick 120 point downtick. So let's hope that at least at 17,450 odd mark can hold out for today's session. Well, let's get in our next corporate though. Metro, well, that's the one that we're focusing on. We have Nissan Joseph, the CEO of Metro Brands, who joins us on the show. Hi, Mr. Joseph. Good morning. Thanks so much for joining in. Well, when we last chatted, you were telling us about the kind of traction you're seeing in the 3,000 rupee per unit plus market. But first, I wanted to understand, how is the lower part of the of the market doing? What is your contribution coming in from sub 1,000 rupees? If you could tell us out there, and ask you this because some of your peers, whether it's Bata, Relaxo, they have reported pain in that segment. Go ahead, sir.
Good morning, and thanks for having me. I don't think we're immune to what's going on below the 1,000 rupee segment. A lot of that is also because we've exited it driven by, a 700 basis point GST increase. So, right there, anything that was on the cusp of 1,000 rupees is now over 1,000 rupees. So having said that, some of it is self-inflicted. Some of it is an economic issue happening out there. There was also a lot of, pent-up buying the year before in all classes of trade. We just seem to have been able to sustain growth year on year in the over 3,000 category. And, I believe that when you look at travel across India, the value of travel is far exceeded that of pre-COVID, though the unit of travel hasn't. So people are choosing premium experiences and premium products in the way they live.
Mr. Joseph, just to get that number out, sub 1,000, how much does it account for in terms of your sales mix?
So for us, it was in the 13% range previously, and it's going to probably hover down a little bit from that. But again, like I said, some of it is self-inflicted because we exited the under 1,000 range because of the GST increase.
Okay, it has been actually a very strong move for you. In Q4, your revenue growth was around 24%. What do you think you can end the year with? And since you said that, travel is picking up and premiumization has also picked up quite a bit, what are the big trends you see in FY24, both in terms of growth as well as, triggers for your company?
I think the strategic initiatives that we put in place and the foundations for it continue to remain solid and have proven themselves over these last 4 quarters. And it continues to do well for us, and that is the process of premiumization of our products, our store expansion, steps that we're taking, our product differentiation and assortment. So we put a lot of strategic initiatives in place. And what we're seeing is the outcome of the results of all the things that we're doing. And we continue to believe that since we've based it on the unorganized sector moving to the organized sector, the footwear sector in general growing considerably, middle incomes rising and aspirations rising with that, tier 2 cities, tier 3 cities becoming more vibrant. All of those factors that we factored in to our strategic initiatives are playing out quite well for us.
Okay, I wanted to talk about one of those synergies, right? Cravatex, the company that owns the Fila brand, is what has become your subsidiary now from the 1st of December last year. Tell us a little bit about the synergies and the revenue scale that you foresee in the Fila brand, and what are we looking at in terms of profitability as well? Because in the last quarter, I think it's still an EBITDA loss that the company is sitting on.
Correct. So, we have a lot of experience bringing brands to India and making them successful, such as Crocs and FitFlop that are now in our portfolio as well. We see a lot of synergies between the Fila brand and what we do, not only what we do as Metro Mochi, but also what we do as private brands that we brought in and expanded in the country. Don't forget, at Metro Mochi, over 15% of our sales comes from athletic already. We are some of the largest accounts for some of the major athletic footwear retailers in India, footwear brands in India already today. So it's not like we are new to the athletic space. It was just a white space in our portfolio to not have a brand that we had the direct license to distribute and sell in India. The synergies also go beyond just our operational capabilities of running stores across all the states of India. It also extends to the fact that our multi-brand stores are great avenues to sell premium products like those of Fila.
So how big can it become then, Mr. Joseph? FY22 did around 150, 160 crores odd, and that's been the broad range. Where do you see this brand scaling to?
Yeah. So we have a lot of faith in where the brand can go. If you look at brands in India of the same ilk, they're north of 300 monobranded stores. They're all doing quite a few hundreds of crores themselves in business. We believe that opportunity exists in India for any sports brand to capitalize on, provided you play your cards well and you do the right things. But the market size is huge and it's quite underpenetrated still. So it is not a matter of taking away market share from somebody else to have to grow. It is just a matter of playing your game and doing it right. We believe the opportunities for Fila are competitive to those of the other players in the industry that you see out there today.
Right, Mr. Joseph, Mr. Joseph, you said that in the past as well. You have big plans out there. I'm trying to get a number from you. Do you think from this 150 crores odd, it could scale, say, 300 crores in the next 5 years or so, or by 2025, do you have a target out there? Let's try to get a number out.
And I think we'll keep trying till we're ready to. What we're focused on right now is we're trying to make sure that we clean up the existing distribution and the existing inventory. That's number one. And then we're going to start putting our plans together for spring, summer of 2024 to launch the brand. I think we didn't get into this to just hold the business where it is. We think, a multiple of what it's doing today is a good aspiration to have and a good target to have for us.